Hello everyone, this is CS Priyanka from CS Priyanka's Professional Classes. So again I am here with the share capital part 2. In this video we are going to discuss issue of shares at premium, issues of shares at discount and sweat equity shares. These three topics we are going to discuss in this part 2 video. Let's get started. So these are the three topics we are going to cover today. So already we have discussed how to issue share at par. Okay. Now through private placement or when you are offering shares to your own existing shareholders, we called it at right issue. We already discussed all these things. Now the topic is issue of shares at premium. Now premium means what? What do you mean by premium? Means extra something. For example, you think you want to issue 1,000 shares at the rate of 100, okay, 100 at premium 5%. So what do you mean by premium? That means extra. Got it? So first let me calculate, like if you want to issue 1,000 shares at the rupee means per share of rupees 100, then your total amount will be 1 lakh. Now you have to give 5% premium on this 100. So 5% premium of this 100 means 5% of 100 equals to 5. So you have to 100 plus 5. So your premium rate is 105. Now you have to give 1,000 shares at the rate of 105. So how much it will be? I think 1 lakh. 1,000 multiply 105 is 1 lakh 5,000. Okay. So 105,000. So 1 lakh 5,000. So now think this is only share capital because we only multiplied these 1,000 shares into 100 par. So this amount is going, you have to transfer this amount to the share capital account. There will be two accounts, one is share capital and one is share premium. In this case you have to open two accounts. In case if you are issuing shares at premium, you have to open two accounts. One you have to open share capital account and other share premium account. Now share capital amount means I am issuing 1,000 shares at the rate 100. So how much will go? 1 lakh will go to share capital account. And how much premium? This one, this 1 lakh, 1 lakh and 5,000. Now the share you have to transfer this premium amount, that is 105,000. This amount you have to transfer in share capital account. Got it? So whenever we are issuing shares at premium, then in such cases you have to open two account. One is share capital account, other one is share premium account. Share capital portion, whatever you are multiplying at par, that will go to this account, and the extra one, addition extra, that is 100 plus 5%, 105. So after multiplying those shares with this extra amount, whatever will come, that premium amount will go to this account. So that's what I have written in this. So share capital account, you have to send the face value of share receives. Face value means this one, whatever is a face, 100 is a face value. And here what happened in the case of share premium, whatever share premium you have received, means this much will go. Now share premium you have to show in the balance sheet, okay, under the item reserve and surplus. This is also very important. Where you are going to show this share premium amount, you have to write under the reserve and surplus in the balance sheet. Okay, this is one of the revenue receipt, okay, income receipt you can say. And whatever amount, this premium amount, whatever the company is getting, this amount may be used by the company for the purchase of its own shares or securities afterwards. For example, like company wants to buy back its own shares from the existing shareholders. So in such cases also company need to invest, right? So what happened, company will buy back the shares from the shareholders. In that case, company has to pay for those shares to those shareholders. So from where the company will get money? These, whatever this premium amount company has taken, from here that company can used, or company can use that money for purchase or for its own shares or securities. uh, in that way they can spend this share premium amount. Okay, so this is issue of shares at premium. Next is issue of shares at discount. Now, just now we have explained premium, that is extra, and discount means less, right? So that means normally what, just take an example, like normally a company if wants to issue 1,000 shares at par 100 per share, means at the rate of 100 per share, discount means you have to give less than 100. For example, I'm giving less than 100 means at par 80 and all. So actually, as per company law or as per companies act, if a company is issuing shares at discount, this is actually void. It's not a valid, void, invalid, sorry, discount, void, invalid. That means it is illegal in nature. Not it. So a company cannot issue shares at a discounted price. This is the first point you have to remember under this topic, that issue of shares at discount. Okay. So this is the first point, that this one is the first point, that a company, if company wants to issue shares at a discounted rate, then this is actually null and void. Okay, as per law, this is illegal. They cannot do. If they do so, then they are contravening the rules. Now come to second one. If a company is not following these rules, still, okay, still the company is paying or issuing shares at a discounted rate, that means company contravenes means not following the rules. Okay, contravenes means you can say breach or not following. So if still the company is not following the provisions, then what will be the punishment? Fine will be minimum 1 lakh, maximum 5 lakh. So fine is minimum 1 lakh, maximum 5 lakh. And the individual person in default, that means the person who is liable, means for example, like a company is a worse term, na? So company is a separate legal entity and it is distinct from its members, directors, officers, employees, etc., etc. So in such cases, if one member or one director or one officer, if do anything, that we cannot treat that company did the same. Like it is totally distinct. So company is having right to file a case against this person, and also company is having right to be filed, means these persons are also having right to file a case against the company. So that's why we call this is one of the feature of the company, that is separate legal entity. So in such cases, the person, for example, in a company, many persons are there. For example, there are 6 officers. Now, out of 6 officers, one officer's responsibility is to take care of the shares, issuing shares, share issue. So, he actually, this officer, what he did, he issued shares at a discounted rate. Okay. And though as per law, this issuing shares at discounted rate is void, so we can say this officer violate the rules. Okay, this officer violate the rules. So for violation, what will happen? The punishment is there for only this officer. So this officer in default will be punished or shall be punishable. That maximum 6 months jail, imprisonment means jail, maximum 6 months jail, or he has to pay the fine, minimum 1 lakh, maximum 5 lakh, or both. Either he will be in jail, next is, or he will pay the money, fine, or else he has to pay money along with he will, means he will get the punishment of the term that is 6 months jail, or both on the best of his crime. Okay, so this is issue of shares at discounted at sorry, at discount. Now come to sweat equity shares. Now many of you can ask me ki, why can't we give, means why a company can't give shares at discount. Actually, a company gives shares at a discount, can give shares at a discount, but not to the public or stranger. Company can give shares at a discounted rate only to their employees or directors. Got it? But we don't say it's coming under the issue of shares at a discount, because it's coming under the different item, that is sweat equity shares, or you can say ESOP, employees stock option scheme, this one. So this is section 54 is telling, just see the name, sweat equity shares. So you know what is equity shares, we have read in the part 1 video. What do you mean by sweat? That means you are sweating. Okay, you are working so much, due to that you are sweating, and for your sweat the company is simply rewarding you by giving shares, by giving some shares at a discounted rate. Okay, but this is not coming under the previous slide or previous topic. This will come under the sweat equity share, because this whenever the company is giving the shares at a discounted rate, obviously they will give it to their own people, like employees, directors, their own people. So this is actually coming under the different section, that is section 54, that is sweat equity shares. Now, so I think it's clear that what is sweat equity share, from where this name came, because employees or directors, whatever you are talking about, or the workers or the employees, they are sweating. Okay, they are sweating as they are working. Okay, they are working for the company. Okay, and their performance is too good, for that they are sweating, and for this sweating, they are sweating for their company. That's why they are eligible to get these sweat equity shares issued by the company. This is nothing but sweat equity shares is offered to their own people or employees by the company in the form of reward. Got it? So this is a reward. Now, these shares actually issued by the company either to the employees or directors at a discount. This is also issued at a discount only, but still this is coming under the different topic, that is sweat equity share, not the like at a discount. But in the previous slide what we read, that company cannot issue shares at a discount to the shareholders, to the stranger, to the public, but they can issue shares at a discount only to the employees or their directors, because they are their own people. And why they will give this one? Because in the form of reward, because they worked and they worked and they are sweating only for that company. Now, whenever the company will decide that, when the company is going to decide that company is going to, okay, when the company will decide that company is going to issue Sweat equity share. So what are the steps they have to follow? First is special resolution and general meeting, because they have to take permission from the shareholders. So what is general meeting? Shareholders meeting. So they have to take permission from the shareholders that they wants to give shares at a discounted rate to these employees or directors. So that permission needs to be given by the shareholders in the general meeting. So first step is SR at GM. Next is, in case the company is a listed company, it's not an unlisted company, then such company needs to check the SEBI regulation. Okay, so here what happened, if the shares are in case listed with recognized stock exchange, then such company will issue sweat equity shares with regulation made by SEBI. So they have to check SEBI along with company act. Okay, Companies Act. So if you are an unlisted company, then unlisted company will follow the rules of this Companies Act 2013. But in case this is a listed company, they have to follow the both. But mainly they have to follow the SEBI, though it's all about shares. And SEBI is also having a different rule for this, regulation for this. SEBI has framed issue of sweat equity regulation 2002, which actually regulates this the provision of sweat equity shares. If any listed company wants to issue sweat equity shares, what are the rules they have to follow and all. This is totally guided by this regulation. And in case your company is not listed, that is unlisted company, not listed company, then for them different rules is there. That is Rule 8 of Company Share Capital and Debenture Rules 2014. This will guide for those company which are unlisted. Okay, that means their shares are not listed in recognized stock exchange. And this rule is for listed only. And also, like whenever the company will issue sweat equity shares, so for that also company needs to maintain register. You know that maintaining register is one of the important thing. So company will maintain one register and register in the form number SH3. Okay, so every company, whenever the company is going to issue sweat equity share, they have to maintain one register, and in their register they have to write the list to whom they are giving sweat equity shares, at how much discount, when, which date, everything they have to note it down in this register, and register in the form SH3 for sweat equity shares. So this is all about sweat equity shares. Hope it is clear to you. So thank you. Hope you like my video. I can assure this is enough for your exam purpose. Okay, if you have any query, please you can write in my comment section. I will revert back. And if you really like my video, then don't forget to like, subscribe, and share with your friends. See you soon. Bye.